लेकिन आपको लगता है कि अब यहाँ से आगे चलते हुए, द काइंड ऑफ मानसून वी हैव एंड स्पेशली जो वक्त 2 महीने का आरबीआई ने अपने पास और ले लिया, डाउन द लाइन 2 मंथ, अब पॉसिबिलिटी काफ़ी सिवियर है कि हाँ इसके बाद ब्याज दरों में कटौती होगी और वो एक परफेक्ट समय भी होगा। सर, इस पर आपका मत क्या है?
हाँ, आई एग्री विथ यू। आई एग्री इन द नेक्स्ट पॉलिसी there is scope to do a 0.25% cut, assuming that the monsoons are normal and there is no abnormal event anywhere else. A couple of things we must bear in mind is that commodity prices have bottomed out last year. So अभी जो ये साल की inflation, what we calculate, that inflation will be calculated on a very low base. And if it's calculated on a very low base, logically the number percentage looks higher. So RBI will keep that also in mind. On the other side is the fact that with the Brexit happening, the chances of a rate increase in the US have receded significantly. So world over, we are following a regime of low interest rates, negative interest rates, zero interest rates. So in that sort of an environment, that also gives RBI the cushion, the ability to drop a 0.25% going forward. But having said that, what we must bear in mind is that RBI has to watch inflation carefully. And if there are signs or if there are concerns around inflation, then RBI may not want to.
ओके सर, एक और चीज़, एक चीज़ जिसने हमको काफ़ी कंफर्ट दिया था वो था लिक्विडिटी की परिस्थिति काफ़ी अच्छी खासी थी। बट सर, जो सितंबर में आपका FCNR रिडम्पशन ड्यू है, उसको देख के लगता है आपको कि थोड़ा सा प्रेशर लिक्विडिटी पे पड़ेगा, या फिर आरबीआई उसको जैसे तैसे, अगर आप देखें उस जो मॉनेटरी पॉलिसी ऑपरेशंस होते हैं, इंटरवेंशंस के जरिए, उसके जरिए मैनेज कर लेगा उसको, लिक्विडिटी प्रॉब्लम्स को मैनेज
कर लेंगे। आरबीआई हैज स्टेटेड पॉलिसी वाज टू कीप लिक्विडिटी रीजनेबली कंफर्टेबल. Liquidity has been comfortable in recent weeks, and my sense is even in September and August, liquidity will remain fairly comfortable.
जी मिस्टर मिस्ट्री, लेकिन रुपए की जो ट्रेजेक्ट्री है उसके आधार पर, FCNR के रिडम्पशन के आधार पर कहाँ तक आप लगता है आपको कि रुपया वीक हो सकता है और कितना आरबीआई को सपोर्ट कर पाएगा थ्रू देयर मार्केट ऑपरेशंस?
काफी सपोर्ट कर सकते हैं, बिकॉज आरबीआई बिल्ट अप रिजर्व्स काफी बढ़ गए हैं। आप देखते हैं, अब इफ यू गो टू सी 2013, September 2013 the rupee was around 67 and even today as we speak rupee is around 67. तो वैसे कोई डिटीरियोरेशन नहीं हुआ है रुपी में ओवर अ पीरियड ऑफ nearly 3 years. So RBI has managed the currency extremely well, and given the low current account deficit that exists, most important is current account deficit. If the current account deficit is manageable, there is no reason why there should be a sharp depreciation of the rupee, excepting that we have to take inflation into account. So to the extent of inflation differential between India and the US, the currency would sort of fluctuate. So for example, in India the inflation is say 5%, for example, and in the US let's say inflation is 1%. And to the extent of the difference of 4%, there has to be some adjustment in the currency to make exports or continue to make exports competitive.
एक और चीज़ सर, क्योंकि आरबीआई ने, अगर आप देखें इस पॉलिसी में, एक बात ये भी कही है कि हम अपने ग्रोथ के अनुमान को उसको चेंज नहीं कर रहे हैं, उसको कोई बदलाव नहीं कर रहे हैं, इन्फ्लेशन ट्रेजेक्ट्री को हम बदलाव नहीं कर रहे हैं। तो आपको लगता है कि जो ये 7वें वेतन आयोग का पैसा आना था, उससे जो एग्जैक्टली एक इन्फ्लेशनरी प्रेशर का खतरा था, उससे आरबीआई फॉर द टाइमिंग बहुत चिंतित नजर नहीं आ रहा है?
I agree with you. On that basis, no, there's less worry about inflationary pressure, but the inflationary pressures can come in only because of the fact that commodity prices last year were extremely low, so we are calculating on a very low base. Arithmetically, the percentage looks high.
जी मिस्टर मिस्ट्री, क्योंकि 7.6% की ग्रोथ रेट को रिटेन किया आरबीआई ने, और उनका ये भी कहना है कि जो जीएसटी है फर्दर वैल्यू एडिशन ग्रोथ को देगा। आपको लगता है कि इस साल का अगर 7.6 रखते हैं तो जीएसटी इंप्लीमेंटेशन के बाद ये फर्दर एक रिवीजन जो होगा वो 50 या 40 बेसिस पॉइंट का अपवर्ड साइड पे देखने को मिल सकता है?
मुझे तो कोई डाउट नहीं है कि once GST gets implemented, even for a moment leaving aside GST, even without GST, I would expect the GDP numbers to keep rising every year. If you look at the urban economy has been strong now for the last 2.5-3 years. Rural economy has been lagging a little bit because of weak monsoons the last 2 years. This year, once we are certain that the monsoons are good, coupled with all the government spending that has been announced in the budget, rural economy should also bounce back, and then a combination of a strong urban and a rural economy will push GDP numbers higher.
Okay. सर, आखिरी प्रश्न आपसे बस पूछना चाहूँगा, बस थोड़ा सा HDFC के संदर्भ में या फिर हाउसिंग फाइनेंस कंपनी के संदर्भ में, एग्जैक्टली सर अभी मौजूदा दरों पर जो डिमांड है रिटेल से और कॉमर्शियल सेगमेंट से वो कैसी आ रही है सर इस बार?
Demand, individual retail demand तो काफी strong है. If we were to look at the first quarter of the financial year, which is the results which are in public domain, in the June quarter. So June में if you see retail loan disbursement increased 26%. Retail loans increased 26%.
ओके मिस्टर मिस्त्री, बहुत बहुत शुक्रिया सर, बहुत बहुत शुक्रिया आपका पॉलिसी की ठीक बाद जी बिजनेस का जोड़ने के लिए। और इस बीच आपकी स्क्रीन पर आप देखिए सुमित, जो विजुअल्स हैं आखिरी बार बतौर आरबीआई गवर्नर मिस्टर रघुराम राजन इस प्रेस कॉन्फ्रेंस में जो करना था उन्होंने कर दिया, लेकिन यहाँ से आगे का आउटलुक क्या होगा? ऋषि क्या कहते हैं? ऋषि से पूछते हैं, ऋषि मुस्कुरा रहे हैं। ऋषि, आपको क्या लगता है किस किस बात पे स्ट्राइक करना चाहेंगे? थोड़ा गुस्सा भी उनके अंदर होगा, थोड़ा प्यार भी होगा, अपने कार्यकाल की यादें भी होंगी, क्या नहीं कर पाया वो भी कुछ कहना चाहेंगे, और क्या कर सकता था वो भी कुछ कहना चाहेंगे। क्या लगता है?
मुझे लगता है जहाँ तक
Thank you, Alpina. Good morning.
उनकी स्पीच
As you will note from the policy statement, we have kept rates on hold, maintaining an accommodative stance while we await developments. We are within the inflation band given to us by the government and expect to be around 5% CPI inflation by March 2017, absent unforeseen eventualities. My hope is the next monetary policy statement will be by the proposed Monetary Policy Committee. The committee to select outside members of the MPC has commenced the process. On the RBI side, the board has selected Dr. Michael Patra to be the RBI board nominee on the MPC. The other two members from the RBI will, of course, be the governor and the deputy governor in charge of monetary policy. With the formation of the MPC, the government and the RBI will have completed a fundamental institutional reform which modernizes India's monetary policy framework and builds a platform for strong and sustainable growth. Some of the collateral benefits over and above low inflation will be a currency that is not depreciating constantly, higher real returns earned by savers, and lower nominal interest rates, including inflation risk premia paid by borrowers. A larger share of the policy statement than usual was devoted to a discussion of liquidity and how we see it going forward. As we have reiterated in the past, we do not see the FCNRB repayments as disruptive. With the preparation we have made and good management, redemptions should go smoothly. More generally, the new liquidity framework announced in the April policy is being implemented. We have reduced some of the structural liquidity deficit. However, the current surplus is partly because of seasonal factors and not because we have eliminated the structural deficit completely. To emphasize this point, we announced an open market purchase today. The RBI will proceed in a calibrated way towards the goal of eliminating the structural deficit. When we have done so, episodes of systemic surplus and systemic deficit should be evenly balanced. Now, despite easy liquidity, banks have passed past rate cuts into lending rates only modestly. Earlier, some bankers said that it was the lack of liquidity that was holding rates high. Now, I hear from some that it's the fear of the FCNRB redemptions that is making them reluctant to cut rates. I have a suspicion that some new concern will crop up once the FCNRB redemptions are behind us. On our side, having examined our experience with the MCLR framework, we will shortly be suggesting some revisions. However, substantial pass-through will happen only as corporate credit demand picks up and as public sector banks, strengthened by clean balance sheets, compete for corporate business. In the next few weeks, we plan to announce guidelines for P2P lending and for account aggregators. On August 25th, we will unveil a new set of measures to improve the functioning of markets, especially the corporate bond markets. Some of these measures will build on the suggestions in the recent Khan Committee report. Before I end this statement, let me use this platform for two important messages that initiate the year-long public awareness and consumer protection campaign the RBI is going to embark on. First, One of the biggest sources of harassment for ordinary customers in the banking system is meeting KYC or Know Your Customer rules. Actually, these have been simplified considerably in the recent past, but sometimes your local branch may not know it. The applicable KYC rules can now be accessed from the RBI's web page by clicking on a bar entitled FAQs for KYC. It was put up this morning. For instance, if you move, your new address can be self-certified and you do not need proof of new address. If your branch does not know these simplified norms, please go to the RBI web page and point it out to them. You will be doing a public service. Second, if you get an email from me or any future governor promising to transfer a large sum of, say, rupees 50 lakhs to you, if only you send a small transaction fee of rupees 20,000 to a specific bank account, delete the email immediately. The reality is such emails are not from me, and the RBI does not give out money directly to ordinary citizens, even though we print plenty of it. While the emails usually contain very convincing reasons why you've been chosen to receive the money, ask yourself why I simply cannot deduct rupees 20,000 and send you 49.8 lakhs. If you think for a moment, you should not fall prey to such emails. This is my last policy statement, but there are still 28 days in my term, which I intend to use fully. We will now take questions.
Lata. Morning, Governor. Lata Venkatesh from CNBC TV 18. The very prominent word is adequate provision of liquidity and move towards system neutrality. Can you give us some calculation of what is the system deficit? Is it 2 lakh crore of base money that you have to create plus the old deficit of 90,000 crore? So is the deficit in your mind 3 lakh crore? Can you define that structural deficit? As well, are you comfortable with this 40,000 crore surplus? And even if it moves, it doesn't worry you that it might impact inflation or inflation expectations. A second question, you've been alarmingly silent about NPAs. Is it that you see it receding, or at least the pace of acceleration decelerating? Is there any confidence at all that that problem is getting resolved? Also, if you can give us some preview of what is this MCLR changes so that transmission happens.
3 questions, any more?
Yeah, if you want, may I? No. 3 more, sir.
On the question, now I forget the questions. The first
liquidity deficit.
First question was liquidity deficit. It's actually a more complicated calculation than you might think, because we have to also take into account what component of our dividend payment to the government, for example, is based on sort of income we've generated domestically versus income we've generated internationally. That also factors into the permanent liquidity calculation. I mean, broadly speaking, we were at a deficit of about 1% of NDTL, and we are moving to eliminate that over time. And the answer is we're probably about 40% of the way at this point. Now, there are seasonalities. Remember, June, July is when cash comes back from the system. And as a result, there tends to be excess liquidity at points like this. And the government also has spent quite a bit. Tax revenues haven't come back. So the point is not to have, to look at this as balance. Because this will dissipate over time as tax collections come in. The point is to have neutrality over the entire year. Dr. Patel, would you like to add something on that?
Actually, when it was announced in April that we would eliminate the structural deficit, we had not given a timeline. And the reason for that are the factors that the governor mentioned, that there are a fair number of transitory issues also taking place. And in the back of our mind, it was a 1 to 2 year program. And I think we need that flexibility for the variety of reasons that you mentioned. And also for the fact that we have to make it congruent with the stance of monetary policy. It's not an unconstrained decision that was taken, but the path is well set that we want to eliminate that deficit, and we will calibrate it in the least disruptive and most beneficial manner.
The second question you had was on NPAs, and I'll ask Mr. Mundra to add anything on this. Broadly speaking, we are comfortable with the recognition process that banks have certainly taken a lot of steps. Some banks, as I've said publicly before, have taken more steps than we required them to take. And so the culture of cleaning up seems to be well embedded, as well as a culture of recovery on some of the loans. What remains is for some of these large stress projects to figure out a way to restructure them in a way that makes sense for the longer term health of the system and the health of the project. Now, there are a number of schemes, RBI schemes, that are available, the latest being the S4A. And well, early days. I think what is important is to make sure, see, the attitude towards these schemes is also changing. The earlier attitude was this is a way to postpone recognition. That is no longer there. Now the question is this a way to effect resolution? And so, the schemes are now being looked at with new eyes. And the hope is that as the recovery in the economy also starts taking place, some of the stressed assets will be put back on track. There'll also be more buying interest in some of the other assets which have the possibility of new ownership. So at this point, I think banks have enough tools. The real issue is to use them. And I think we're working with them to make sure that any...
Is the line disconnected?
At least let's put the volume down. Any impediments are rectified, but again and again we emphasize we don't want to go back to the old days of forbearance. So they have to use this in an effective way, and the schemes have been structured such that there is no implication of forbearance. Mundra sir, would you like to add something?